Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Joining us now with the best newsletter note in the street is Callie Cox. She has a privilege of working at Ritholtz Wealth Management and surviving their senior management. Callie joins us right now. And the note is Optimist Callie. Let's start there. Callie Cox, how do you avoid the pessimism that forces people into safety when they've got actuarial assumptions that say they need growth?
The note's name, Tom, I have to give a shout out to senior management because that was Josh Brown's idea. But I think it's a good reflection of how we at Ritholtz and personally how I view, markets and the economy. And I think you have to do that based on the burden of proof, right? Evidence throughout history that U.S. stocks and, the stock market has been the only game in town to build wealth and beat inflation. So my newsletter is all about processing the headlines that we see day after day in the context of that super important context.
Do the layoffs that you feature today, great charts, by the way, see that at Ritholtz Wealth Management. Callie Cox, do the layoffs, the trauma of inside the Beltway, Washington, does that lead to diminished consumption, which finally slows the stock market?
I think we have to take a few steps back here. And I have been on the record for years saying that the job market is the engine of the economy. So when you see one of the biggest job cuts or mass layoffs in history, you have to talk about it no matter where you are in the political spectrum. These layoffs, and we're also getting a sense of how big they are. But the reports right now are that most, if not all, of probationary workers in the federal government could have been affected. That's 200,000 people. If that's true, plus the buyouts we've seen, plus the hiring freezes we've seen in the federal government, that could have a huge impact on the job market in DC and consequentially on the job market in America. And yeah, if you think about Americans, we when we make money, we spend money. Consumer spending is 70% of the economy. You should be worried about this.
And Tom, on that issue, Torsten Slok, our friend at Apollo, is out with a note tracking the employment rate in the greater DC area, and we're starting to see it tick up a little bit. So he's going to, and it comes out every Thursday morning for the district and northern parts of Virginia and southern Maryland. So we'll keep an eye on that. Callie, so you talked about kind of the equity markets being the real driver of wealth creation historically, and actually within the equity markets, it's been the tech names that have been really the sources of our performance here. Can that still be the case going forward, whether it's Mag 7 or some broader definition of tech? Is that still going to be a leader?
Well, another concept we like talking about at Ritholtz a lot, and we serve long-term clients, right? We're not making trades for a month or even a quarter or a year ahead. We're thinking 5 to 10 years down the road. But something that we preach at Ritholtz and that I personally believe in is portfolio balance. And I think portfolio balance is going to be the phrase of the year heading into 2025. And we're already seeing it, right? Tech is lagging the S&P 500. The Magnificent Seven hasn't been so magnificent. And it hasn't necessarily been because of fundamental developments. Profits are still growing at a strong pace among big tech companies and the tech sector in general. But expectations are really high for tech companies right now, and it's becoming clear that they're not the obvious winners of this AI story that's propelled them for so long.
Callie Cox of Ritholtz Wealth Management. What's the Cox exuberant meter look like, Callie? It's been our theme this morning. Huge divergence among strategists, but is there a retail exuberance out there? Ritholtz is very good at that, aren't you?
Yeah, so we look at a few different gauges here. The one that's my favorite gauge is the AAII gauge of sentiment, which was looking a little euphoric toward the end of last year, but there's actually been a big swing from euphoria to some of the biggest pessimism we've seen in a year and a half, which I think speaks to the policy uncertainty that we're under right now. The sell-off or the relative weakness we've seen in tech. I think it's one of the most interesting stories on the market right now because these past few years have been propelled by fear and pessimism, and now it's coming back.
Callie, we're almost 80% the way through the earnings season this season. Is there enough earnings growth out there to support this market based upon what you've seen and maybe some of the guidance we've heard?
I think so. And you have to keep this in mind when you're talking about how the market is overvalued. Yes, valuations are quite high, especially in tech, especially in these more growthy names, but we are seeing strong profit growth, and I'd say the strongest profit growth in growth names right now. That may not continue. If you look at Wall Street analyst estimates, there are expectations that this earnings growth will broaden out to other sectors. In fact, as soon as this quarter and the next earnings season. So if that's the case, then I would expect other sectors to play catch up in markets. And that's one of the reasons why we're preaching portfolio balance.
But it's not broadened out. What it's really about is a huge body of people that aren't in the market. What do you advise to the cash crowd?
You're right, Tom. There's a lot of cash on the sidelines right now, and an unusual amount considering how well the stock market has done over the past 2 years. I get it. If you're getting 4% on your savings account right now and the world feels uncertain, then yeah, you probably like the comfort of cash right now. But I think you have to be very intentional with your cash balances at the moment. I think cash looks like more of an attractive hedge than it did possibly a year ago because it looks like rates will stay relatively sturdy. But again, stocks are your path to building wealth and beating inflation. You can't forget that.
Optimist Callie, thank you so much. Callie Cox with Ritholtz Wealth Management.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Marc Champion with Bloomberg Opinion and, of course, encyclopedic on the continent of Europe. Marc, I want you to give me an arc of the moment in Europe. I take great offense, whatever anyone's politics, with a British newspaper giving me Neville Chamberlain at Munich and whatever's going on now. What's your analog with all your excellence, Marc Champion, to where we are right now?
Well, I think the better analog is what President Putin did in 2007 at the very same conference in Munich that Vice President Vance spoke at, and this weekend. And what he did there was to just put the West in general, Europe and the United States, on notice that he was not going to play by their rules anymore, that he felt that Russia had been cheated, and that he was going to assert Russian interests from now on any way that he felt was necessary. And a year later, you had a war in Georgia. You've then had wars in Crimea, etc. So it was very consequential. What happened this time was essentially the United States saying to Europe, "We are no longer on the same page. We are." No longer going to give you the sort of total security guarantees that you have enjoyed since the end of the Cold War, since before during the Cold War, and we're going to move on from here. He also talked about why it is that he thought that Europe and the U.S. were no longer shared values, and he got involved in trying to determine who the next leaders of Germany should be. So it was a big shock for Europe and may well prove consequential, as 2007 did.
And listen to this language, Paul. This is from Amory Horton. This is a State Department readout. Establish a consultation mechanism to address irritants to our bilateral relationship. Now that sounds like I'm talking to a 17-year-old daughter named Afterthought. But, that language, Paul, is so vague to address irritants.
Exactly. So, Marc, where does that leave NATO?
Well, so NATO is at the same time, as people always say, the most successful alliance in history, etc. But it is based on something that was always very fragile, which is the faith in Article 5. The faith that, if one country is attacked, no matter how small that member of NATO, if it's attacked, then, the rest of NATO, and that, most importantly, the United States, would pile in to defend them. And so the real kind of worry for Europe in this kind of talk is that, what you're really saying is we're not sure about Article 5. And, it's not just whether Estonia or Poland believes in, that that's the case, and that they start to be worried about whether the U.S. really has their back if Russia was ever to attack them. It also, even more importantly, is whether Russia believes that security guarantee remains, because and most importantly, it is a deterrent. It was, the whole purpose of NATO was never have to fight the former Soviet Union or anyone else after the fall of the Soviet Union. So that is what really worries people in Europe.
So, Mark, if that were to be the case, is there a belief within the European Union that the countries can in fact step up their defense spending and make up for some of the American support?
Well, I mean, that is what they're talking about trying to do now. It's always been possible. The problem is that they've known that they needed to do this for, more than a decade. They have increased their defense spending a lot in recent years, but nowhere near enough, and they started far too late. They've also are not very efficient in the way that they do it. And therefore, they have to recognize, they do recognize that they still are not able to defend themselves without the U.S.
Right. Mark, I got to squeeze this in. I think it's too important. One of the 14 threads of this over the weekend is that the U.S. or whoever will exit the Baltic region, the Baltic states, defense of the three, Estonia, Latvia, Lithuania, that we will hold Finland less protected. How will Mr. Putin respond to that? Is that like the gift of gods to the Tsar of Russia?
Yes, in a word. It's slightly more complicated in that he's, I think, quite unlikely to go after Finland. Finland's actually quite well protected. It has more artillery pieces than Germany, France, and the UK combined, for example.
Wow.
And so, but yes, the Baltic states are another matter. They, in terms of sort of share of GDP, one could say that they spend pretty decently, but they are tiny, and they are definitely, in what Putin considers as the proper sphere of influence of Russia. So, if it succeeds in Ukraine, he will be interested in Moldova, for example. He will be interested in the Baltic states. How he does that, whether by hybrid means, by different kinds of coercion, whether he just invades, but I think the real concern for them would be that that's the logical place if he wants to test whether Article 5 really exists anymore.
Not enough time. Marc Champion, thank you for your work, 24 hours, 7 work to explain all of this for all of us across America. Just huge value add. With Bloomberg Opinion, look for Marc Champion. I'll get his work out on social here as I can through the morning.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
This is important in that we have Tobin Marcus with us. He's head of policy at Wolfe Research, but far more than that, withstood the White House within the Biden administration, providing policy and economic perspective. He's qualified given the way your head's spinning and my head's spinning because he's out of physics at Brown University. I remember sitting in quantum mechanics, surviving Schrodinger equations, and then Heisenberg showed up. How dare he? And there's an uncertainty principle now. If you have two particles, you can focus on one, but the moment you focus on one, you lose sight of the other. It's a whole important idea within the magic of quantum mechanics. Tell me the quantum mechanics now of our diplomatic efforts in America. We can focus on one thing, but then the other things drift away, it seems, instantly.
Look, the focus is, I think, shifting rapidly. The Europeans are trying to get their heads around it. But I mean, coming out of the Trump administration, we're seeing certainly an attempt to move forward on a lot of different dimensions simultaneously. We have obviously this diplomatic effort out of Ukraine. The Europeans simultaneously are very, very concerned about what Trump's tariff rollout last week could mean for them. It's a lot of moving pieces.
You were with the Biden administration. Would you suggest that the Biden administration did not move forward?
I worked for Biden in the Obama administration, somewhat longer ago.
Okay. But did they not move forward? I mean, what we're getting now is initiative. If I'm a Trump supporter, I'm saying, look, we've got initiative now.
Yes, I mean, certainly, I think the latter stages of the Biden administration were somewhat listless. They came in with a lot of ideas, were, faced a challenging global landscape. But, certainly you look at places like Ukraine. I don't think that we saw a lot of progress over the course of the past couple of years. Sort of theory of the case. After the big, counteroffensive that they tried to prepare the Ukrainians for, which didn't really succeed, I think mostly we were kind of holding ground for the past few years.
So I guess one of the bigger issues that we're all coming to grips with over the last couple of days is this kind of transatlantic relationship that has been in place since the end of World War II. Against maybe, to challenge the USSR, now Russia. Is that fundamentally changing now, right before our eyes?
Yeah, certainly the incoming administration does not look very, transatlanticist. They're looking at our alliances in Europe through a lens of American self-interest, and I think they're not convinced that the current set of structures that we have in place is really serving us.
So where does Europe go from here, do you think? Because it appears like the U.S. policy seems to be pretty clear here in terms of we're going to drive this ship, and if you want to come on board, great. So how does Europe respond, do you think?
Yeah, they're reeling. I don't know that the Europeans have the level of internal cohesion that they need to formulate a sort of alternative strategy. I mean, there's been lots of talk for years now about the European Union emerging as a full spectrum geopolitical actor, but thus far they've not really been able to get out of their own way.
My essay of the weekend off Mario Draghi's Chatham House work of, 6-7 months ago was a brilliant essay in the FT where he said Europe has self-inflicted service sector tariffs with all their regulation, which he and his team calculate out to 30, 40, even 45% tariffs. The zeitgeist this morning is the markets are okay because tariffs don't affect markets. Do you agree with that summary?
Well, they certainly haven't affected markets a lot so far. It's been striking the extent to which markets have looked through them. Even, the China piece that actually already happened is equivalent in scale to the entire 2018-2019 China trade war. And we shrugged it off completely in markets because we didn't simultaneously do 25% on Canada and Mexico. But if you look forward, the reciprocal tariff rollout last week was greeted with relief because it wasn't taking effect right away. We never thought it was going to take effect right away. But the numbers that we could spit out if we're looking at VATs alongside tariffs are incredibly high. I mean, they're north of what Trump was talking about on the campaign trail. You're looking at 20-30% tariffs all in on a lot of these countries if you're just adding up their tariffs and their VATs. So I think it's a little premature to be too relieved.
So what are you telling your clients these days about the inflation risk associated potentially with tariffs, with changes in immigration law, for example?
Yeah, no, certainly. I mean, they're both stagflationary shocks of different extents. On immigration, there's been a lot of ink spilled about deportation. I think it's been somewhat underappreciated. What's going to happen to people who are already here, who stand to lose their work permits? So the big impact there. And on tariffs, I mean, look, we have what's already happened on China that's meaningful but not world-changing. If he goes through and does exactly what he said last week on reciprocal tariffs, that's very inflationary.
So quickly, folded into Wolfe Research's belief in the equity market, do they take the world of Tobin Marcus and say, we can not ignore it, but we can at least prosper within this maelstrom? Yeah,
no, we're not sort of market-wide bears on equities. I think things can continue working. They certainly have so far.
Right.
From a rates perspective, we're at no Fed cuts this year for sure. I think that's one impact that we're seeing clearly in terms of what this all adds up to. Ongoing debate, but that's where we are.
Fascinating. Come back tomorrow when the news completely changes. Tobin Marcus with us, Wolfe Research, here this morning.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
The daily look at the front pages of Lisa Mateo Hour and now a 2-hour newspapers because there's that much news flow. Where do you start?
Well, not sure if you noticed on your Google Maps, but the Gulf of Mexico now reads Gulf of America.
Really?
You can see it now. Mexico, though, now threatening to sue Google over the name change. It all started because of President Trump's executive order to change the name. But during a news conference yesterday, you had Mexican's president started talking about this. She said a lot of the body of water, it's outside. And you see it, right?
I see it.
See, it's in the U.S. You can see that. But she's saying is that a lot of the body of water lies outside the U.S. maritime borders in regions that are controlled by Mexico and Cuba. And she says the executive orders to rename it only applied to those in the U.S. Continental shelf. So that's what she's arguing back and forth.
And Encyclopedia Britannica said, no, we're not going to do that.
They didn't do it.
And I think, I don't know where AP is. I believe they've also said, no, we're not going to do that.
They have not, yeah.
I have no idea.
They're not allowed on Air Force One either.
How you do that? I mean, I don't know how they came up with the Gulf of Mexico versus Gulf of America. I have to do some research on that. But it is about the territorial waters. I think Mexico has a greater percentage of the territorial waters.
Yeah, Mexico and Cuba is ginormous. Yeah. Like Cuba goes way over to the west.
Yep. So, all right.
You know.
Yeah, but now it's a battle.
All right.
How about if we name it the Gulf of Jimmy Buffett? That'll,
that would be perfect.
Straighten it out.
That would win over. We've been talking about, the bird flu, spreading from birds to chickens to cows. And now scientists are saying, well, maybe it could be coming from more humans. There's been more dairy farmers, about 68 confirmed cases in people, but they're mostly dairy farmers. And now veterinarians who cared for the cows are contracting it. So what they're saying is that scientists are worried because it hasn't really spread from human to human transmission. Yeah. So that's where they think things could change. And if, it could happen because we're in the worst flu season. So you have that, it could raise a possibility of this new, more infectious bird flu strain because we're in such an infectious flu season.
Can I ask something dumb?
No.
What if you get bird flu?
Yeah, that's correct.
Is it like a 3-day, I've got the plague, I can't go to work, or is it more serious?
I don't know if it's more serious, but what they're saying, the problem is that the federal government has this limited stockpile of vaccines if you were to get it. So that could be an issue if it starts spreading to more humans.
I'm not up to speed on this other than I can't buy eggs.
Right.
Oh. When can we not buy milk? I mean, what's the, does it go over to cows like you say and milk? And,
it's tough.
Wait, cows don't do eggs, right?
No.
As far as I know.
But the Costco at Costco they did have the brown eggs only, and everyone was scrambling for them. It was like
scrambling for them, and you were fried because you were last in line. Okay, Paul feels poached. Okay, last. Quickly.
How to stay fit past 100 years old without going to the gym. Okay?
So this is
notes. Take notes, okay? Because Business Insider spoke to centenarians and they say that they did a couple things. So what you have to do is you have to walk a lot more. So outside, up and down the hallway, go to Walmart, walk the aisles, whatever you do. You have to cycle instead of driving, okay? Even if it's like a stationary bike, if you can't drive, at that age. All right, you can get on the Peloton, Paul, okay? Yep. Make it a social thing, so join like a club, like a bowling club, Paul.
How many centenarians are there out there?
There is more than you think, to be amazed. So they're basically saying these things because they're saying, here's what we've been doing over the past 10, 20 years. And that's why we're living so long.
Paul and I are just trying to get through a Tuesday morning. It's 12 degrees out.
Exactly.
And you just seem glad all over. I mean, I don't know what to say, Lisa. You just, she's so glad.
Lisa with them
yes,
newspapers.
You got to keep moving.
Lisa Mateo with the newspapers. Thank you so much.
This is the Bloomberg Surveillance Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.